Well, because they had a more sensible monetary policy on the way up. They have commodity-backed economies, and commodity prices, despite quite a sharp sell-off at the end of 2008, have bounced back already, and so they've had quite good revenues from their commodity-based activities. And they've kept their public sectors under much better control. The Canadians went through a massive change in the amount that they spent on the public sector a few years ago. And any country that keeps its public sector spending and borrowing under control does perform better. I think that was one of the tragedies, and they then got into all sorts of legal arguments about it. They were worried about disclosure and the impact it would have on an individual bank. Well, there was an easy way of solving that, which has been done in the past. If you're getting to the point where one or two banks really are in trouble, but you don't want to reveal their names, you announce there's a system problem, and you announce that all banks are going to be into the Bank of England to borrow money. And the ones that are strong borrow £10, and the ones that are weak borrow £10 billion. And you sort it. And yes, there'll be a few rumors going around, but that is the way to do it intelligently, to show that the bank does stand behind all the banks. It thinks all of them are solvent, and therefore it wishes to make them sufficiently liquid. And you try and dress it up a bit to make it a bit more difficult to people to pin down one particular one for a special blame. I mean, the lifeboat was much more intelligently done. That was the nearest thing any of us have seen to the current crisis. It wasn't as big as this. But I think it wasn't as big as this because the authorities handled it better. Because there were rumors about one of the leading big four banks in those days. I wouldn't want to mention the name, but you've singled out one. And we all avoided mentioning things, although we knew the rumors at the time, and we were very grateful that the authorities understood it and saw them through. Yeah. I normally favor more transparency than we have, and I normally think the US comes to some very intelligent answers because they have traditionally been a richer and faster growing society than us. But on this occasion, I don't think I would copy the American system, because the American system is for much more transparency than we've had on banking, cash, and capital. I remember when I visited the US as one of the UK regulators some years ago, and thought I'd get some private and confidential steer from them, because we had a few problems with a few companies. I wanted to know whether they were experiencing something similar. And the man just gave me the list with no confidential on it. And he said, no, it's all public knowledge. You know, they're the four at risk. Oh, right. We go to great lengths to make sure nobody knows that we have a list with four at risk on it, you know, because I was the insurance regulator at the time trying to see insurance companies through a tricky patch. And I actually think for once the British system was better, and I had to handle the insurance problems of the early 90s. And I did exactly what I've just described. I got in contact with the insurance companies I was worried about because I was their solvency regulator. And they all very kindly went off and raised some more money without anybody knowing that I'd asked a question, because that would have cut their share price. And they lived happily ever after. And I think that's what the public wanted, and I didn't mention it until 20 years had passed, and it was quite safe to start mentioning it. And I think that is a better system. It's one of the rare exceptions to the rule that disclosure is always the right thing. So I would do that. On the investment banks, I wouldn't have let them get into that mess, because if you'd been conducting a proper monetary policy and a proper banking policy, they would not have been able to gear and borrow that much money. Because although some of it was done through fancy instruments, quite a lot of it was done through traditional bank borrowing in the normal way. And that was even more true of the hedge funds. And if there had been tighter monetary control and tighter control over bank balance sheets, there wouldn't have been all that money in the other sectors to gear up, because there has to be a banker of last resort for a banking system. That's what the public interest is. The public interest is that if you put your £50 or £500 in a bank that is regulated by the system, you should have every confidence you can go and take it out any day of the trading week, and there's no problem. And as soon as you get to a point where that may be in doubt, because there's not enough liquidity in the system, I think that is a fault of the central bank. And the central bank must be there to supply liquidity to the system. The banking regulator is there to make sure that you're never making short-term loans available to insolvent organizations, because then the taxpayer wouldn't get their money back, and that would be quite improper. So that's why you need both types of regulation. You need the Bank of England to be astute in the money markets and to keep them liquid enough, but not too liquid. And you need the banking regulator, who may be the same person, making absolutely sure they have enough long-term capital so that if they did have to borrow too much short-term, you can make them sell assets and you get your money back. That's the system. Well, the fiscal policy has not been helpful, particularly in the last couple of years, but I'm afraid you do have to be critical of the monetary policy as well, because the banking excesses are a monetary phenomenon. And they would not have happened if the Monetary Policy Committee of the Bank of England had sent stronger signals earlier by raising interest rates that they thought it was getting out of control. And the fiscal policy got progressively more relaxed as the boom developed, which was also quite wrong. That was something which the leading opposition party, the Conservatives, were complaining about at the time. That was the meaning of you're not fixing the roof when the sun's shining. You should be reducing the deficit or going into surplus as you build up economic success in the way they were apparently doing. Otherwise, it turns out not to be a success, but to be a series of false promises based on borrowing you can't afford, which is the position we're in. Now, there is no simple way out, I'm afraid. The government wishes you to believe that we have a license to print money as much as we like and a license to spend and borrow as much money as we like for the duration of the downturn, and that if you do that, you will pull the economy out. Whereas the truth is that you cannot build a recovery out of excess borrowing and money printing, and that you do have to get balances back into shape, that you've got to get the government starting to live closer to its means, and you've got to get the banks into shape so that they've got strong enough balance sheets to make new advances to the private sector again. And they're just delaying the inevitable workout that it's going to take. And in the case of the government deficit, they're making it far worse by escalating it and allowing it to run on. It just means the adjustment, when it will have to come, will have to be bigger. And the markets will force it. It's not that politicians want it, it's that the markets will force it. The currency will go down too much, or the markets will stick the interest rate up to lend to the government too much when the money printing stops, and that will force the adjustment. Otherwise, the recovery will be damaged by the measures that the government says are helping it. Should they be regularly stress testing? Well, yes and no is the answer to that. No, you do not want to go to a very expensive special study at periodic intervals in the way they're now doing. Yes, the leading bank regulator should know the balance sheets of the 5 or 6 biggest banks in the country in his or her head, and should know if there's an adjustment to be made from the data flowing in. And they should be thinking about it once a year. They should be thinking about it daily when they're in the office. That's what they're paid to do. Yes, I would stop QE. We're about at the end of the 175 billion. I hope the MPC don't intend to extend it. I would say that's it, and that we now need to reduce the government deficit. Otherwise, the deficit is too large to be easily financeable without these special measures. And do you know where you are on the cycle? No, you can't be sure, but again, you need people with judgment. My judgment is we're pretty close to the bottom of the cycle. We're clearly not at the top of the cycle because we've just fallen 5.5% in GDP, one of the biggest falls of the advanced economies. And so I would be quite happy to put some money on the idea that we're somewhere near the bottom of the cycle. And when you look at the state of the banks and the illiquidity of the system, I think now is the time to be much more relaxed, whilst being very clear in private to these banks that they've got a huge amount to do to sort themselves out, and you want them to make much more rapid progress than they're doing. I cannot believe the sums of money being paid to bank directors in nationalized banks. I think it's quite wrong. They are loss-making. They have a huge inherited burden of loss for which many of them were responsible, so I don't think they should be rewarded.
What about non-directors? What about,
Well, the same applies to senior executives who have been contributory to the losses. Yes, they should not be rewarded.
What if you've got someone who's been brought in who's earning £100 million a year for RBS, say, and he's being paid £20 million?
Well, if he's going to be paid out of future cash flows and profits, which he is clearly earning, and they're not going to risk the bank's assets, then that may be a different issue. But you've got to be able to ensure it's truly ring-fenced and there isn't a long tail of liabilities on it.